Spar's first half headline earnings per share climbed by 9.1%. That's to 305.4 cents. For more on the numbers, the Wayne Hook, CEO of Spar, joins us on the line. Wayne, great to have you with us on Power Lunch today. Just looking at the adjective that you've chosen to describe the period, you said a pleasing improvement for this interim period. What were your thoughts on the numbers that came through in terms of turnover, up by 13.6% for the period?
Well, Samantha, we're very we're happy with that. I think 13.5%. Inflation obviously has helped that situation, and that it was somewhere in the region of 7% for us during the course of the 6-month period. But for us, we had volume growths of over 6%, so that reflects, I believe, the underlying health of our business. And so as a result of that, pleasing.
Let's talk about the food side of the business, because you mentioned the fact that competition is rife in this sector. We know that Foodco, which is part of the Massmart staple as a result of Walmart, has now been set up. So how are you positioning Spar in light of all this competition? And what is the strategy? Do you impose price reductions, or how are you positioning the company?
Yeah. Well, I mean, we operate across the full spectrum of the LSM profile. So, obviously, Massmart are geared more at the emerging market per se. So we trade across the spectrum. It is competitive. It has been for the last couple of years, and obviously with Massmart getting into food, it is just additionally so. So, for us, the retail battle is won and lost on the shop floor. So, for us, it's providing leadership to our retailer, upping our game across the board. So, with regard to particularly fresh food, I mean, that's crucial for us. Obviously, one doesn't make too much money out of selling groceries these days, and so yeah, it is competitive. And for us, it's about leadership to our independent retailers. We still believe in the model, the fact that our guys have got their livelihoods on the line, that they are, we believe, more passionate, and they've got more to lose and more to gain by doing a better job out there. But yes, it is competitive. Obviously, one's got to be price competitive on a day-to-day basis. So it's really just upping our game across the board, not changing and trying to do something completely different. We've got
just doing what you do better.
Yeah, we've got to do it better. I mean, retailing is not rocket science. It's about doing the basics better, and that's what we're focused on, and trying to provide a better support to our retailers to enable them to do that.
When looking at the one side of the business that has really been a success story in an area where you do make good margins, that's the liquor side of the business, adding 25 new top stores, 523 is the total number that you have right now. Are you at all concerned around South Africa's and the government's plans to tighten regulation of alcohol and liquor retailing right now?
Well, I think that situation is always something that we stay close to. I think that we're aware of those developments, and obviously have plans in place to deal with them. But for us, it seems like South Africans in good times or bad times are going to party, or they're going to consume alcohol. So we are focused on making sure our offering is good, our stores are good out there, our advertising is on the edge, is fun, that it appeals to people. And we believe that Tops is coming of age as a brand. So we got to do the basics that we can control right. If the government impose regulations or change the way things are done, that affects all of us. So we just got to make sure that the stuff that we can control, we do better. If advertising changes, we got to find other ways of encouraging people into our stores, and the fact that we have 523 stores, we have the footprint to continue to deliver the offer.
Tell us about the plans for Spar in terms of the size of the retail outlet that you're going to be looking at going forward, because we know that Woolworths and Pick n Pay both have a presence in garage and those smaller stores that we have, that's a smaller format, and then on the other hand you've got mass Pick n Pay and Woolworths retail outlets coming to the fore. So what is the plan for Spar? Are you looking at what competition is doing and changing your retail format?
Well, I think we're always aware of what the opposition are doing, but we've got to focus on our own business and what's right for us. Spar has grown out of small stores many, many years ago. Spar's been in South Africa 49 years. and they were very small stores that we started with. What we have tended to do is go up into bigger stores, into super Spars and the like. That doesn't mean that we are we've always had small stores, and our quick Spars are our smaller, let's call them speed shopping, real convenience stores. So we do have formats across the spectrum. We have looked at forecourt stores a number of times and walked away from them. But we've had a number of, all the big guys have come and talked to us because we've had the infrastructure. But we were worried that they don't make money. But we're looking at them again.
Very quickly, Wayne, in terms of your expenses, gross profit margins slipping back to 7.9%. We see the share price reacting negatively to the expense side of the business. What is the outlook to defend margins there?
Well, I think, it is competitive out there, and we can't, more goods are being sold on promotions, that sort of thing. So, obviously, we are not immune to what's happening in the market, as it's our retailers are affected, so are we. But primarily, the reason for our slip is that our build-it business and our liquor business, which are at lower margins when one looks in percentage terms than is groceries, it's the mix of product that we are selling. Those have grown at 19 and 20%. The food business has grown at 12 and a bit. So it's actually the mix that is a big player there. On the expense side, we had some new initiatives that have caused the expenses to go to 11.5. The underlying costs of our comparable businesses at about 9.9, and when one takes fuel, we've got 300 trucks on the road at any point in time. Fuel's gone up 38% for us. If I look at the rest of our costs, they've been well controlled.